and its name is Marco.
Hi everybody, and welcome back to another show of Hoot Loot, the place where you come to be informed, be amused, but never be misled. Who else can say that but us? So far, we have gone unchallenged with all of our controversial statements. Now, today is October 9th, 2022. It is after the futures market have opened on the futures exchange. So I know a little bit about what's going to happen tomorrow, but it's not different than what we've already told you about, which is that we're in for a rough ride. In any event, you are in the fact zone. And the reason it's called the fact zone is because we only deal with facts here. Okay? Same fact time, same fact channel. And we're, like always, we're not going to make any friends, but we're going to tell you the truth. And what you do with it is totally up to you. I want to thank you very much for all the new subscribers we're getting. We're getting them by en masse. Also, we have a daily update. It's on Getter, LinkedIn, TikTok, Facebook, something else I can't even think of right now. But we're all over the place. Instagram, we're all over. All right? So with that, I'd like to say thank you for joining us. And the show is called How to Profit from the Challenging Times Ahead. All right? We're in for a really bad time. We're going to show you how you can mitigate risk and or make money. All right, with that, I want to thank you very much. We're going to be right back with the charts. Welcome back, everybody. Now, I'm going to go through something that will help explain why you believe that things are not being reported accurately. For example, the government says 8% inflation. You know it's not. You're paying what? 15% more? 18% more? Gasoline, you're paying 3,000% more? We know that that number does not accurately compute the cost of inflation. So what John Williams does, this is front page, is called www.shadowstats.com. This part is free that you're looking at right now. And you're looking at an analysis that is so incredibly complex. And this is free right now what I'm looking at. So I'd like you to take a look at it. I think it's one of the best newsletters out there. I consider it must reading, and we're going to show you why your instincts are correct, but yet the data doesn't prove it. It proves the opposite. All right, so this is the first graph that John includes. What he does is he actually readjusts government numbers to what they would have been today had they counted them the same as 1990, 1980, 2000. All right? So there is absolutely an incentive by who else? Professional politicians. Okay, and by the way, we're calling it Professional Politicians Suck Month during October. Okay? So just keep that in mind. All right. Anyway, this is the unemployment data. It's really not 3%. It looks like it is. It's more like 20. Why? Because if you're looking for a job and you've gotten discouraged because you're getting paid less, they don't count you anymore. They just stop counting you. So this is a number that is manufactured to reelect the politicians, the professional politicians who suck. All right? Now we're going on to the next one. Okay, this one is inflation. Okay? Now John's measure of it is in blue. The red is the official government stats. Oh, God. Now, if you look at the spread here, they're more like 15, 16%. What you're used to, what you think it should be, or what you think the measurement is. And that is what John does. Now, when you exaggerate inflation the way that he has, or the way that it's been done by different presidents to get reelected, it makes a hell of a difference in everything. Okay? Everything. Okay, now finally, we have the alternate GDP series. If you think the economy, I have claimed for a long time, the economy is in a depression or will be. This shows why it is, and you don't hear about it. You hear, oh, we might have a mild recession. No, I'm sorry. We're going to have a depression as defined as 10% peak to trough GDP. We'll be lucky if it stops there. Lucky. We have Very compelling charts today, and we're going to show you how to make money from all this. All right, so we're going to go to the indicative stocks, all stupid stocks, by the way. And for those who haven't watched lately, stupid stocks are those that are highly overvalued, highly overhyped, highly profitable to the people that sponsor them, but are not profitable to the suckers that buy them. Those are called stupid stocks. Probably one of the stupidest I've ever heard of is a Peloton, which makes stationary bicycles. Oh gosh, how high tech. All right, anyway, Bitcoin, the password formerly known as Bitcoin. Why is it a password? Show me a Bitcoin. Can you show me one, please? Oh, all you can show me is a password to your wallet? Do you know what's in there? No, you can't even see behind the curtain, just like the Wizard of Oz. Who's the man behind the curtain? Can't see it. All right, now Bitcoin, or the password formerly known as Bitcoin, they had another little accident this week. $570 million hacked from the largest exchange. This happens every week. And people still brag, oh, I make money every day with Bitcoin, blah, 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 blah. Passive income, my ass. Anyway, Bitcoin right now is very close to triggering another waterfall. What I mean by a waterfall is an amount that would be something like 15 to 25% in a matter of a few weeks. It's not technically a crash, but it could be. We don't know. Right now, we're still on elevated crash risk because it is that time of year and some of the conditions are being met. All right, so let's go on here. Okay, second, this is the ultimate stupid stock, Arc Innovation, and it's about to go gonzo too. Okay, they've already lost something like 80%. I'd say another 50% is coming up. Okay, there you go. And up until now, they've had money flow in. Not now, not anymore. People are getting out now and starting to blame Kathy, knock on wood, for being such a chump. All right, now the third one's called MicroStrategies, and this is another laughing stock of a company, I will say. First of all, Michael Newentown Sailor, as we call him, should actually be called Michael Drunken Sailor because he's intense. He's going to throw away his company over something that doesn't even exist. Bitcoin, you heard me right. It does not exist. There is no such thing. Or I should produce one. You could show me one. How do you know it exists? And how do you know how do you establish a value for it? Okay? Anytime in my life I've needed a greater fool, all I had to do was look in the mirror. Okay? And I might say, I don't understand. Women should be all over me when I look in the mirror, but they're not because I'm the last fool. Okay? All right, so MicroStrategies is raising $500 million in a stock offering so that they can buy more Bitcoin. Oh, my God. You know, these guys have $2 billion in debt outstanding. Why don't you use it for that? You know, talk about irresponsible. No, I won't talk about irresponsible, or else, never mind. All right, so the fourth one is the stupidest stock of all, probably. When we have our award show, and we're going to have one, this is a front runner for stupid stock of the year. Kathy, knock on wood, also has the biggest position in this stock. Now, this thing is making a really massive rounded top, and it is very expected that it is going to go down a long way. As a matter of fact, it's worth more, or was worth more, than the top 15 company car makers combined. You know, we're having like blackouts here in Southern California, and lo and behold, Governor Gruesome Newsom is doing stupid stuff again. He wants to tax the oil companies. He wants to punish. Oh, that's great incentive, Gruesome Newsom. California has $2.50 more in costs than the average in the country. Believe it or not. And he still wants to raise it again, even though he has a big budget deficit. All right, and that's enough of that. I won't even talk about Elon Musk. I've already talked about him enough times, but I suspect that the reason he's buying Twitter and Manchester United, which have nothing to do with anything he knows how to do, is because he wants to unload this. And he could do that by unloading it and then buying them. That's why he all of a sudden bought Twitter, because he thought, what the hell? I'll lose a little here. I'll lose a hell of a lot here. Well, that wasn't such a bad strategy if it weren't so damn transparent. Elon the Felon, I may say. Okay, Let's go to the indexes. Now, the Dow has actually started to break down. It has a red ellipse, and it's turned firmly bearish. We are in the part of the bear market that is going to be really challenging, really. And I'm going to give you some ideas about how to protect yourself. That's why I have the umbrella behind me. The umbrella is a sign of protection, and it's a sign of low risk. So we're going to go on from here. But the target, if you recall, the targets are comprised of the top of the dome, which is in green, to the red line going across. That difference is 7,000. So we take another 7,000 from 30. We revise it down to 23. Now, if you remember this, we first had 28, and it hit just about 28. Now it's going to hit 23, and we're going to come very close to that too. All right, the NASDAQ 100, 5 years. Now this is interesting. We've revised its target down to 5,500 from 9,500. It hit just about 9,500, and it's bounced back. It's got everybody all happy, and they believe now it's all going to be okay. It's all going to be okay. It's all going to be. No, it won't. There are two domes in this, and if you look at it really rationally, this thing is going to make a round trip all the way back. That's what you're up. That's what you're up against. Okay, all the way back. It is going to go all the way back. All right, now we have the small caps. Just broke down. Target revised down. Again, same type of analogy or same type of math. All right, the S&P 500, another one. If you recall, we said 3,600 target, and look at that. It hit about 3,600, bounced back, but now we have a bigger rounded top within a smaller rounded top, and it's going to make a nice trip all the way back to 2,400. Okay, so that's another third down. All right, we're going to show you why a third down is possible now. Not only possible, but likely. All right, Dow Jones Transportation Average. Need I say more? FedEx, global recession, global recession, global recession. People can't get that out of their heads. Duh. We knew that a while ago, didn't we? All right, so we revised the target down to 8,000. All right. In each case, they're being revised down. They've been accurate so far. For the most part. For the most part, it's been a very, very good rule of thumb. All right? All right, so now we have these are the 0 to 5 year tips. Okay, these are Treasury inflation protected securities. They go up when inflation expectations go up. They go down when inflation expectations go down. All right? Simple as that. So this is a 5 year, and it has broken down out of a dome. Now, I'm going to say right now that energy is starting to buck the trend. So I'm not so sure that I would act on this right now. Okay, really not sure. Because interest rates are going to go up, and that has only one effect possible. The values of everything go down. Everything. All right? So these are tips. These are more of a longer term Treasury inflation protected security. But again, it has broken down. But take into account that we're going to show you evidence that energy is going up, and that will have an effect on this index. As a matter of fact, it is the largest weighting of the index. Even food has to be transported. All right, now, these are the 0 to 5 year tips ETF. This is daily now, all right? So this is daily, not 5 years. Now, look at the way that thing has fallen, like right off a cliff. And that tells me one thing. The economy is about to fall off a cliff, and we're going to have inflation anyway. Thank you, Jay Powell. All right, this is the Goldman Sachs Commodity Index. At first, it broke down, but I would say this could be a bull flag. It could also be a bull flag. That means it'll break up, not down. The highest weighting is energy. All right, energy. That's natural gas, oil, gasoline, everything, coal, electricity, energy. All right, here we go. Now, this is the Agriculture Fund. Okay, this shows that food is going down, and it's still going to go down. It broke down from a bearish ascending wedge. This means it's very unlikely for food to go up right now. I don't know if there's people are starving themselves. I'm not. Nice and whatever. But I'm not. Neither is Ace, by the way. He has all the dog food. I have a large supply. Okay. Now, this is the base metals fund. This is laying coppers at, et cetera, et cetera, et cetera. And this doesn't look so good either. In other words, this is economically sensitive. And as I look at it, I go, I mean that, Okay, let's go on. Okay, I didn't draw this graphic, unfortunately, but I'll describe it for you. All right, this is Freeport Copper, one of the largest copper and gold companies there is. This doesn't look so good either. Looks like a little rounding top there, curling over. And they have said that there's not enough copper to go around, that the green dream is a farce. We already know that because we told you why it's a farce. EVs don't save a thing. They're not green. They're someone's political agenda, but they don't do you any good. And banning them, like Gruesome Newsom has done, is a complete travesty. Gruesome Newsom, you should be ashamed of yourself. All right, we'll go on to the next. All right, crude oil, 5 years weekly. This has broken out. It was steeply going down. It's now broken out. We can also see that in the stocks. We're going to show you that momentarily. These are the only things right now that look good that could be bought. Other than that, I would avoid. All right, we'll show you some too. So, the United States Gasoline Fund also broke out in the last couple days. Okay, this is an ETF of gasoline, and look at that. Just jumped. Part of the reason it's jumping is because it is no longer driving season, and the refineries have to do a turnover to heating oil from gasoline. So all of a sudden now, gasoline has jumped up in price like $1.50 here in beautiful commun. All right, this is gasoline weekly 5 years. I guess you see the same thing, okay? And natural gas. Remember, this is the U.S. market. This is nothing like the European market, where natural gas sells for $500 per barrel of oil equivalent. $500. $500. Pipeline just blew up. That's not a good idea. All right. But right now, it looks like I think it will come back here also, because we are now obligated to send supplies over to Europe. All right. The oil services index, these are the drillers, right? If they think that there's going to be improvement in prices, they pull out the drills. If they don't, they cap the drills. Okay, simple as that. This one is very close to breaking out bullish, because there's the anticipation that we're going to see higher oil prices, higher profitability. But then we have Joe Biden telling us no. Now, this is a graph of Arch Coal, okay? I seem to recall a certain president who promised the end of the coal industry, but in fact, all this green farce, they're bringing back, they have to use coal because they can't use anything else to power the power plants, which we also pointed out a long time ago. And now people are going, oh my God, how do I refuel my EV? It's so good. No, it's not, actually. Wait till you see Beijing and how polluted it is. You won't think so. Just because it doesn't come out of the tailpipe doesn't make it not polluting. The smokestack of utility is one reason why not. They're running at full capacity, having brownouts, blackouts all the time, and these idiot Bitcoin miners, or it's password miners, whatever the hell they want to be called, plus this EV craze. And that's what you get, all right? So we're going to go on to some stocks that are worthwhile. Okay, Chevron being one of them. It's owned by Warren Buffett. It's a formerly Standard Oil of California. And this is a well-positioned company right here. As you can see in the graph, it's about to make a new high. If it goes above that top green line, about 155, it becomes quite attractive. All right. Pioneer Natural Resources. I thought shale was dead. Apparently it's not dead. It's going up. Shale lives. No thanks to Biden, I may add. All right. ExxonMobil. This used to be the largest cap stock in the world. And this one also looks like it's breaking out. has a very high yield dividend. Nothing to complain about here. And Warren Buffett owns this too. All right, now we're going to go to craptos. I hate these. I hate these. Ethereum. Okay, now I'm going to say this again. Okay, Ethereum is a .org. You can't own it. All right, you can't own it. It's like thinking that you get a ticket to a Dodger game and you think you're buying into the Dodgers. You're getting a token which you don't know what the hell it does anyway. And their big hoop-de-doo is blockchain. Blockchain. Like, what is that? Oh, it's a ledger. So what? Jeez. And this thing, you know it's going to break down, right? I mean, look at the graph right there. And we're going to have another big leg down. This is another good indicator of it. All right, so we shall go on to the next, and that is Coinbase. Now, this one is going to break down too, I think. And you can see the triangle. And if it does go above 80, we'll call it bullish, but we won't have to do that. Below 60, bearish, bearish, bearish. BlackRock is going to regret their investment. You better believe. You know, they're trying to give it legitimacy or something. I don't know why they would possibly buy this thing. Anyway. Now, this is more important. Apple. Apple's the largest cap-weighted stock in the world. It's worth still more than 2 trillion, that is. And it just kind of shot down there in the last couple of weeks. So it could easily turn bearish. It just has to go down to 135. And you've got the largest cap company that is pulling the market down with it, which is why the broad averages, of which this is very highly weighted, are going to lead the way down. And we're going to see 33% down or something like that. We may not see it all at once, but we're going to see something like that. All right, this is Amazon. Now this one, you know, if it gets above 145, looks bullish, but more likely it will go below 100 and turn solidly bearish. Another mega cap company that makes up the QQQs or the NASDAQ 100, and it's not going to enjoy its glory days. And that's just a function of higher interest rates, which we will talk about momentarily. Okay. This is Google. How easy can you get? Breakdown from a bear flag. Okay. So this thing is heading down. I didn't bother with a target on it, but it has a long way to go. I mean, it could go down to the bottom here and have the symmetrical little upside down parabola that they'll have. You know, they start somewhere and they end up at the place they started. Okay. That's pretty much what happens. What you're going to see today. Exactly that pattern. So you'll understand the patterns that they repeat. Like me. Repeat. All right. Meta platforms. Oh my God. I don't want to talk about skid Mark Zuckerberg, but you know, I'm going to say one more time that these virtual reality headaches, virtual reality helmets or whatever he has, they cause headaches. There's very little possibility that that's going to be mass bought when it causes a headache in an hour. All right. Okay, Microsoft, also another company where we've revised our target lower. As you can see in this chart, there is a parabola within a parabola, you know, or a cone within a cone, and it hit the first target, bounced back, and it'll hit the next target. And because it's so highly weighted, you're going to see that kind of damage done to the major averages. It hasn't been done yet. All right. Okay, the bank index is a disaster area. For one, we still have an inverted yield curve. And an inverted yield curve is where the 10-year bond yields less than the 2-year bond. That's the definition of it. And it's been negative for a fairly long period of time. Okay? A long period of time. They are among the best recession indicators that can be. Okay, the broker-dealer index, well, most likely around the top. Doesn't look like they've kind of caught up, but they will. They most certainly will. You know, no one will be spared. American Express, again, massive rounded top. Almost every single company is in a massive rounded top. Why is that important? Because it means they have been building pressure to go down or up. Once they go down, they break the rounded top, and every single person who bought in the cone is down. So they're thinking, oh my God, the best I can do is break even. And they become net sellers. That's called playing defense. And you're going to have to do that. Berkshire Hathaway is about as well-run a company as you can get. All right? It's really well-run. They've bought, oil companies and some other good... They have not bought cryptocurrencies. No. But even this is still susceptible to higher interest rates. They cause everything to go up or down. All right? Even a company as good as Berkshire Hathaway. And it's a good company. All right, Goldman Sachs. Well, a little bit closer to breaking down. I think it will. The thing is, right now, everything is falling apart. Not at the same time, but everything is falling apart. So when you see the actual unanimity that I'm going to show you of things falling apart, except for oil companies. Oil companies are not, but everything else is. And this will fall apart too. JP Morgan Chase, one of the most important bank companies, massive rounded top. What did you expect? MasterCard, I guess the consumers tapped out because we've had a sideways flag pattern for about a couple of years. And once again, now everyone is underwater. That's not a good place. That's not a good place at all, because it means on bounces you have sellers instead of having dips and having buyers. Okay, that's the difference. And the consumers tapped out too. That's somewhat relevant. Now, Visa 2, Dow component, breaking down, consumers tapped out. Consumers tapped out. Don't forget, the consumer is 70% of GDP. He or she is tapped out completely. Kind of like in wrestling. I give up. Like that. All right. Now, another thing that has already hit its target we've talked about in the past. And I have mentioned that I sold my own residence because I believed that the chart was going to be accurate. It was, I would say it was accurate. I would say it was quite accurate. Okay?
Yes! Yes!
All right, this is the semiconductor index, and in a moment we're going to do our song of the week.
Yes!
All right, this is a new part of the show, a song of the week. All right, but I want to talk about this first. Okay, the semiconductor index is a large component of the NASDAQ 100, and companies like AMD reported bad earnings. So has Nvidia again, and they're just going down like crazy. All right, so we're gonna come up with the song of the week. All right, we're gonna start our new song of the week series, and the victim is going to be Fancy Nancy herself, the inside trader that she is, and overseeing a city of people pooping in the streets, homeless population. Very good job, Fancy Nancy. This song is dedicated to you, and to you only. Sung to the tune of I Want to Hold Your Hand by the Beatles. And here we go. To you, Nancy, Fancy Nancy. Oh yeah, I tell you something that you won't understand. Why man Fancy can be so fancy while making 200 grand. I wanna hold. She has a magic hand. She's got the insider hand. Yeah, you seem to always look so haggard, no mask. A public service is to you a boring task. I just can't ask. No one lets me ask. What do you do? What do you hit with that flask? Oh, and by the way, Fancy Nancy, do the words vodka selector mean anything to you? I'm wondering. Okay, well, I hope you enjoyed our tribute to Fancy Nancy, and we're going to go on. Okay, this is the airline index. Transportations are getting hit by higher energy costs and a declining economy. They're not in good shape. These are the airlines to that. CSX Corp is a railroad, and this one is also in a massive rounded top. They all are. And look at the target. It's going to go down a long ways. All right, FedEx Corp, it hit its target right away. It was making a rounded top, and it just went gap right down to its first target, which was about 150. And it's still come up with another bad earnings report for the same reasons. The economy is really bad, by the way. It is really bad. And I don't mean to alarm you, but there are ways around it. We will show you some other ways very soon, okay? Just hang out. We're going to show you real soon. That's why I have an umbrella behind me. All right, United Parcel Service, also very economically sensitive. It's broken down to global recession, not enough packages, consumer tapped out, et cetera, et cetera, et cetera, et cetera. Okay, JB Hunt Transport, trucking company. Look at that. Again, a rounded, massive rounded top, and it has a long way to go, et cetera, et cetera, et cetera. Okay, Matson is an international shipping company, headquartered in Honolulu, and it also has a massive rounded top. And the reason that these patterns are so important is because they don't resolve to the upside very often. They're very reliable. And if you don't believe it, see some of our earlier shows, and we really had the targets there that we hit. Okay? We really did, or we got very close. You know, it's just a rule of thumb, like under my thumb, that kind of thing. All right? All right. Now, Target is a special case, and there's Target's Target. Okay? Target's Target is way down there. Okay? They have so many problems, inventory, excess stock, plus the worker is getting a pay cut every single month, not because his wages are going down or hers, but because they are not keeping up with inflation. That's the reason. So you wonder why they're so hard to get, get good labor. That's why. We're paying them less. We're paying them more not to work. What the hell do you expect? Okay, Walgreens Boots Alliance. This is Walgreens, basically, but it's a retailer. This is at a new 5-year low. That should tell you something. I mean, there isn't even a target I could draw on it. The target barely go below 0, but we know it will have to have some value. All right, Coca-Cola. This has now joined the party. Look at how well this company's been run. Its stock has gone up for months and years and months and years and months and years. And Warren Buffett also owns it. But it's joining the party on the downside. That's why I believe it will be really rough, because we are getting even the good companies to go down. And they're going down en masse. All right, Procter & Gamble, another consumer products company that is held up. And P&G succumbs to the bear. That's all you need to know. McDonald's Corporation, which is why I'm wearing my belt or my pin. May I help you? This is Marco, and I really did work at McDonald's at the turn of the century, I think. I don't remember. But this one also has had an incredible run, and it finally went, I think I can, joining the party. Okay, the U.S. dollar. Please read what's on this page. It will explain what the U.S. dollar does and why we have such problems with it. For one, we have a worsening trade balance, although it hasn't worsened recently because oil production is finally going back up, and therefore we need less imports and we can export more. But other than that, it's a large number. So you have more imports, less exports, and worse GDP. And then finally, multinationals who earn money in other countries have to take a hit because they have to translate those earnings into local currency. So it acts as a headwind if you're a multinational company, and that's the S&P 500 for you. All right, now I've left interest rates for last for a reason. All right, these are 3-month U.S. Treasury yield index. Now this has gone from practically 0 to now 3.3%. That's important. It's important for a lot of reasons. It means our national debt service is going to go up. And the likelihood is that there will be further rate increases. You got to understand, the higher the rates, the lower the value of everything, all risk assets. All risk assets. So if you want to be bullish here, go right ahead, but you're committing financial suicide, in my opinion. All right? Okay, the 2-year Treasury yield is the highest across the spectrum. It's at 4.3%. 4.3%. You know, we average 1.3% debt service on all of our 31 trillion. This is a tripling. Do you know what that would mean if everything got tripled? That would mean that our debt service would explode to $1.3 trillion. That's more than Social Security right now and barely below Medicare. As a matter of fact, we'll have so many entitlements and non-discretionary spending that there's nothing left. You know, nothing left. All right. Okay, this 5-year, again, sorry about that. No great markings, but this one is also hitting a new high, or close to it. Now, the 10 years is also a benchmark rate. It's still going up, healthy uptrend. Until this comes down, no mas. All right, 30-year, making a new high. This is not good. A lot of things are priced off of this. And so as long as interest rates keep going up, risk assets keep going down. Okay, now these are some kind of risky recommendations, and I won't even call them recommendations. They are things that you should think about. Okay, this is the ProShares Ultra Short Dow, and it looks like it's made a saucer bottom. We are bearish on the Dow, and this is twice leveraged on the Dow, so you make money when it goes down. Okay, you make money when this goes down, and for safety's sake, please keep your stops in there. Don't bet the farm on this. Another one that I kind of like is this one, short S&P 500, ProShares Ultra, making the same kind of pattern. See, the thing is, they're all making the same kind of pattern. They're all in unison. You know, this is going to happen. All right. Next one is the short NASDAQ. Remember we said 5,500 target. That's got a long way to go up in this case because this is an inverse short. All right. And last but not least, the ProShares Ultra Short Healthcare. The drug group is way the hell up there, and it is just broken down too. So this represents a pretty good opportunity. And, you know, thank you very much for tuning in, and we really appreciate it, especially all you new subscribers. Please feel free to tell me I'm full of it, if you think so. If you agree with me, that'd be great too. Sometimes people do agree with me. It happens every so often. But we appreciate the fact you tuned in, and we'll see you next time. Be on the lookout for the YouTube shorts, okay? They are daily or almost daily, and they have been phenomenally accurate too. All right, see you next time.